Check one, check two. We are on back again, ladies and gentlemen, and it is Thursday, October 21st. This is Conscious Crypto. My name is MC Medina, and every single day, giving you guys the latest and the absolute greatest in decentralized crypto news, also known as DeFi news. And today, ladies and gentlemen, all across the board, looks like numbers took a little bit of a dip. After the initial bull run here, we're going to get into some numbers. But first and foremost, like we normally do here on Conscious Crypto, we're going to light up some Palo Santo, get some sage going. Hope everybody's doing well today. We got Gaia Lectra behind the scenes right now, making sure that all the audio and video, the lights, the camera, and directing all the action here today. So make sure you leave a thumbs up or a peace sign in the comments below. If you're checking us out live on Twitch, please let me know what your top 3 altcoins are. And or if you're not even investing in crypto right now, also leave a comment. And if you're watching us on YouTube, go ahead and hit that subscribe button, only if you're into making money and learning more about decentralized crypto news. And what does that mean? Well, pretty much the traditional banking institutions that we know today are a centralized entity. And what does that mean? Well, essentially, the centralized institutions are subject to rules and regulations and statutes of the local governments. And so on Conscious Crypto, we want to empower our brothers and sisters in learning more about how to become financially literate and financially sovereign. So we're going to be giving you guys tips and tricks on how to continue to develop your financial literacy and also gain financial sovereignty. So let's get right into it, ladies and gentlemen. We're gonna get into the chat here. Go ahead and host. If you're checking in, please host the channel, and we're gonna share the link here, send it to our people. Brand new app right now called Trustkeys. I wanted to let everybody know about. It's a Facebook killer. If you haven't already gotten on Trustkeys, please send me a message or leave a comment. Do something. Reach out to me so I can give you the exclusive invite key. It's an invite-only app right now. So let's see. Here is the link. And let's get straight into it, brothers and sisters. Bitcoin is down 6%. Ethereum is down 1.64%. And this is a really interesting thing I'm going to get into later about the relationship between Bitcoin and Ethereum. XRP is down 4.71. Bitcoin Cash is down 3%. Doge is down 4.24. Now, even though we've got even though we have a few coins and a lot of the coins, especially Bitcoin, experiencing some a little bit of decline in percentages here in the last 24 hours, we still have some top gainers for today. And today we have Bounce token at the top at a 60% gain. We have Assemble Protocol, which was up like 130 something, or it was over 100% yesterday. It's still going up. It's up 33% from where it was yesterday. District Ox coming in third place at 18% gains, 18.85. The Graph right after that with 7.31% gains, and then VeChain at 5.22. Excuse me. All right. And let's get into some of the latest and the greatest in DeFi news. But before I do that, I want to get into the relationship between Bitcoin and Ethereum. All right, check it out. It's like this, guys. Anytime we see a rise in Bitcoin, we will also experience a rise in altcoins, especially Ethereum. And the reason for that is mainly because of the adoption rate. Whenever people learn about Bitcoin and they use it and they start to adopt it into their financial literacy, into their financial programming, once somebody learns and adopts Bitcoin, they will normally learn and adopt Ethereum shortly thereafter. It's just the way that it is. And normally Litecoin would traditionally follow that. And there's a number of other coins that people will normally learn about in that order. So what's happening with the relationship between Ethereum and Bitcoin is that when people learn about Bitcoin, they're putting their money into it. Then they find out that Bitcoin is not the most efficient way to transfer electronic funds. As a matter of fact, a more efficient way is Ethereum and the Ethereum blockchain, due to the fact that it's faster, it can handle more transactions per second, and it can handle more higher dollar amounts per transaction than said Bitcoin. And it's a lot faster as far as transferring it from one wallet to the other. So what we're seeing here is, because of the adoption rate with Bitcoin and the adoption rate with Ethereum, people learning about Ethereum shortly learning after Bitcoin, what we see is people are buying Bitcoin, but they're selling the gains more often than they are buying Ethereum and selling the gains. And what I mean by that is, if you have both Ethereum and Bitcoin and you're watching it go up, what we're noticing is that there's more people that sell the Bitcoin after a bull run than there is people that are selling Ethereum. Most people are holding on to the Ethereum, which is why we are seeing a 6% drop in Bitcoin and only a 1.64% drop in Ethereum in the last 24 hours. Is because of the adoption and the application of the coins. So I wanted to make sure that everybody got the download in regards to how Ethereum and Bitcoin relationship is. Overall and generally speaking, whenever Bitcoin is doing well, everything else is going to be doing well. And that's because of the adoption once again. Let's get into some of the latest and the greatest in DeFi news. Breaking Google's monopoly. And this story came in 7 minutes ago from Sam Borgi. Breaking Google's monopoly, INTERNeX pushes a decentralized cloud as privacy concerns grow. The data monopolists like Google have abused their position, according to INTERNeX Fran Villalba Segara. Decentralized architecture is offering a solution. Let's dive right in. Privacy-focused blockchain file storage service INTERNeX has a lofty vision: leverage decentralized technology to break big tech's monopoly over user data. Its first product, INTERNeX Drive, is aiming to compete as an alternative to Google Drive and Dropbox without compromising personal privacy and data ownership. In an exclusive interview with Cointelegraph, INTERNeX CEO Fran Segara described the core technology behind his product and explained why privacy should be considered a fundamental human right. He also explains the perils of centralized architecture and why big tech constantly violates user privacy and what's in store for internet users in the era of Web 3. Privacy as a human right. Now, although privacy advocates have long been concerned about big tech's exploits of user data, Facebook's Cambridge Analytica scandal in 2018 blew the lid wide open on the subject. As a refresher, Cambridge Analytica was a British consulting firm that was able to obtain data on millions of Facebook users without their consent. The information was used for political advertising. Now, in July of 2019, the Federal Trade Commission fined the social media giant with a whopping $5 billion for privacy violations. In retrospect, exploits like Cambridge Analytica didn't surprise Segara, who told Cointelegraph that protecting users' privacy conflicts with the business model of companies like Facebook, Google, and Microsoft. That's why these companies collect more data than what is actually needed, he explained. Their services aren't an end per se, but a means to an end. The erosion of personal privacy by big tech compelled Segara and his team to create a new business model based on decentralization. The company's first product, INTERNeX Drive, is described as an alternative to Google Drive and Dropbox that's based on zero-knowledge encryption and geo-distributed data centers, he explained. Files uploaded to INTERNeX Drive are fragmented, client-side encrypted, and distributed all over the globe so that a server never holds a complete file, but instead an encrypted data shard. In these architectures, files are soft split into evenly sized segments of data. Each segment or block has its own address, but no metadata to provide context about what it is. The storage target can be configured to replicate data across storage arrays or distributed file systems. Unlike centralized systems where user data is stored on physical servers owned and operated by the cloud provider, decentralized architecture provides enhanced security with respect to cloud functionality. If a decentralized component is compromised or encounters a runtime error, which is an unrecoverable worst-case scenario, is that the component goes offline, while the rest of the cloud continues to function normally, he explained. On the other hand, while centralized cloud storage systems' core functions are interlaced within the same space, if an error or attack manages to destabilize a centralized component, the entire cloud is at risk. Web 3 and the future of privacy. Web 3, a broad concept that refers to the new paradigm of internet services where users retain more control of their personal data, has been heralded as a potential solution for society's growing privacy concerns. The current paradigm, dubbed Web 2, as mainly driven by companies that provide services in exchange for personal data. The advent of blockchain technology has made decentralization nearly synonymous with Web 3. The decentralized cloud storage technology being championed by INTERNeX aligns with the narrative that Web 3 changes the very nature of data ownership and puts more control in the hands of the users as opposed to the big tech companies. Industry observers have rightly noted that this new paradigm could challenge existing privacy regulations, especially as decentralized applications continue to grow. Web 3 is certainly going to be huge, Segara said, adding that consumer-centric applications that allow users to protect themselves online is going to be hugely demanded by the market. INTERNeX is coming off a successful seed round, having raised $1 million in a raise that was led by Miami-based venture fund Venture City. Segara said adoption is growing, with the company expected to generate 1,500% year-over-year growth by the end of 2021. Look into that, guys. It's INTERNext. That's INTERNext. INTERNeX. Doing big things for Web 3.0 and essentially making it to where a Google Drive or a Dropbox is decentralized and has the ability to travel from its start point all the way to its destination in a manner of taking advantage of and incorporating blockchain technology. Oh, I had to take a alkaline water break. If you are interested in having alkaline water in your home, please drop comments below. Reach out to us. We have the house units, and we can also provide you with some of the best alkaline water technologies known to humanity. All right, let's get into the next segment here, ladies and gentlemen. And for today's adoption news, all right, guys, this is breaking news. 4 hours ago, Erhan Karaman sent this in. Free coin to everyone project aims to make 1 billion crypto owners in 2 years. Backed by a 16Z and co-founded by Sam Altman, WorldCoin will give free crypto in exchange for an eye scan. Funded by crypto heavyweights New Crypto Unicorn, WorldCoin revealed its plan to let everyone claim free coins to accelerate global crypto adoption. Wow. All right, I don't know how I feel about this yet, but let's dive right in, ladies and gentlemen. Providing the global population with free cryptocurrency sounds like a moonshot project, but $25 million in backing from Andreessen Horowitz, Coinbase Ventures, One Confirmation, Blockage, and Day One Ventures, and a valuation of $1 billion adds some weight to the WorldCoin project. Co-founded by Alex Blania, Sam Altman, and Max Novenstern, WorldCoin saw the participation of more than 100,000 people from around the world during its test period and aims to reach over 1 billion people within 2 years. For comparison, there are over 300 million crypto users worldwide as of 2021. Speaking to Cointelegraph, WorldCoin co-founder and CEO Alex Blania said that the co-founders met in 2019 and started working on the project in early 2020. Sam thought, "We could really change the world for the better if we could launch a new, collectively owned, globally distributed cryptocurrency," he said. WorldCoin is a cryptocurrency implemented as a layer 2 on top of the Ethereum blockchain, where anybody can create accounts, submit transactions, and participate in the validation process. Its mainnet launch is expected next year. The inclusive nature of its ecosystem, distribution of free coins, and the incentives for new signups are 3 levers to drive the adoption of crypto, Blania explained. Signing up for WorldCoin does not require any previous financial resources. WorldCoin validates whether the person is real and has claimed their free share by scanning their irises with custom hardware named Orb. Independent entrepreneurs around the globe will operate these devices as Orb operators. Blania explained that those operators are rewarded for every user they sign up for WorldCoin. For example, an Orb operator in Indonesia partnered with one of the biggest food delivery companies in the country to sign up every driver, rented a whole storefront in a shopping mall to leverage high foot traffic, and was even invited by the chief of a nearby village to introduce the whole village to WorldCoin. His experience with this village was so successful that it resulted in 8 other villages asking him to do the same. The mention of an eye scan immediately brings up Big Brother-esque concerns about user privacy. According to the announcement, the Orb will convert the scan of a person's eye into a numeric code, so the original image does not need to be stored or uploaded. The underlying system won't link this numeric code to users' wallets or transactions to preserve privacy. Users can also participate in the WorldCoin network without providing an eye scan, but they will not be able to claim the free coins. The team is developing a non-custodial mobile wallet app to ease the onboarding process. It would enable transaction between users and act as a navigator for finding nearby Orb operators. They aim for a fast scale-up with a distribution of 50,000 Orbs per year, possibly with the upcoming funding rounds over the coming months. So really interesting stuff. I actually want to learn more about this Orb project that we have here with the Orb operators. Maybe we can uncover some more of that. But okay, free crypto for an eye scan? Maybe something to think about there. All right, let's get into the latest and the greatest in crypto news. We're going to get into some of the EFT news here. Inflation fears or EFT driving Bitcoin price. The market report is live with Big Cheds. All right, the market report with Cointelegraph is live right now with special guest BigTech is a professional trader and one of the founding analysts of Bitcoin Live. Analyst Benton Yuan, alongside resident market experts Jordan Fineseth and Marcel Pechman, as they break down the latest news in the market this week. This is what to expect. Is the Bitcoin Exchange Trading Fund the only thing driving up Bitcoin price, or are there other factors at play? The first ever Bitcoin futures ETF hit a record-breaking $1 billion in assets under management in just 2 days. How will additional EFTs affect the price of Bitcoin? And should an Ether ETF be expected anytime soon? Ether is now within reach of its 4,500 all-time high. Does Bitcoin lead Ether or vice versa? Where will the price of Ether go next? So definitely, if you guys want to check that out, that is the market report there. Answering those questions, super duper important. Where exactly are we going? Now let's get into some Solana gains. Looks like we got 26% in 2 days. $250 Solana price target next? Question mark. Okay. Let's see. Solana's latest price rally comes in the wake of the new Bitcoin all-time highs above 65,000. Solana coin rallied higher on October 21st, that's today, as traders shifted focus from Bitcoin to the most promising altcoins. Notably, the price of Solana increased by more than 11% to over $196 a token, the highest level since September 11th. Combined with the gains recorded in the previous 36 hours, Solana was up by as much as 26%. A new Bitcoin all-time high price on October 20th triggered price rallies across all the altcoin market as well. For instance, Ethereum's native Ether token posted better intraday profits on October 20th, closing 7.32% higher, around $4,170. On October 21st, the second largest cryptocurrency rallied further to $4,374, just $10 short of its record high at $4,384 on Coinbase. Conversely, Bitcoin corrected by more than 3.5% to below 65,000, and as a result, the Ethereum to Bitcoin exchange surged by more than 5% to reach an intraday high of 0.06 or 6%. Similarly, Solana's performance against the US dollar over the last 2 days came out better than Bitcoin. That prompted Solana and Bitcoin to climb by more than 8% on October 21st to hit 0.0026772 Bitcoin, showing that traders rotated capital out of the Bitcoin market to enter the Solana market. Interesting. So what we're seeing here is the big moves from Bitcoin gains going straight into Solana. And you know what? I do not blame these people whatsoever. Solana's latest price rally also appeared as a bullish breakout out of its multi-month consolidation channel. Sol started consolidating sideways inside a triangle-like trading range after rallying by more than 200% in the August and September period. As a result, the formation of more than 2 higher lows and lower highs, coupled with a declining trade volume, raised the prospect of the channel being a pennant. Since a pennant is typically a trend continuation indicator, their formation on the Sol chart after a massive price rally raised its prospects of sending Sol prices higher. Thus, the breakout from October 20th now eyes an extended round up, with its target sitting at a length equal to the size of the previous uptrend. In other words, the price target of Solana could be as high as $250 before the end of the month. However, a retest of the pennant's upper trend line as support would risk invalidating the bullish setup. So you keep an eye. I highly recommend everybody to keep an eye on Solana within the next couple of days. I am holding Solana, and I have experienced considerable amount of gains with Solana. And if we can keep an eye on it, we'll be able to distinguish whether or not so the reason why I hold Solana is mainly because it's more efficient and it can handle more transactions per second, and it can also handle larger transactions than what Ethereum is offering on the Ethereum blockchain. So the Solana blockchain is able to provide the same money transferring capabilities, but at a much cheaper rate. And I'm talking about, like, if something would to cost $12 to $15 on the Ethereum blockchain, it would cost 0.00005 coins, essentially US dollars. And so that's not even a penny, which makes Solana a huge asset to the DeFi and the decentralization community. Let's see, 4 hours ago, we have Bitcoin sheds 6% in battle for an all-time high support amid falling funding rates. Bitcoin markets are getting slowly cleansed of irrational exuberance with a classic drawdown towards 60,000. Bitcoin briefly dipped below 63,000 today as a standard correction cooled the market. Data from the Cointelegraph Pro and TradingView followed Bitcoin and US dollar as it came off all-time highs above $67,000 to hit lows of $62,860 on Bitstamp. The roughly 6% drop from its peak became as a little surprise to seasoned traders, despite Bitcoin so far failing to create solid support at the site of its previous all-time highs of 64,900. Bitcoin is still undergoing the retest attempt, popular trader Rect Capital wrote in his latest update, suggesting that the old high could still flip to support. Others took the chance to poke fun at the jittery mood on social media, where various users were getting cold feet observing the retracement. The return to near 60,000, now the top of a large buy wall, meanwhile served to flush out excess optimism on derivatives markets. As Cointelegraph reported, funding rates had skyrocketed overnight, but were slowly returning to more sustainable levels at the time. Sentiment showed prevailing extreme greed among the market participants, with the crypto fear and greed index at 84 to 100. Historical top scenarios have involved 95 to 100 or higher. Altcoins tend to stabilize with Ether, and Solana is leading. After losing out broadly against Bitcoin, major altcoins were spared a come down of their own, with Ether still above 4,000, and Solana has gained over 25% in the past 2 days. Only Binance Coin saw any noticeable down-drawn movement, trading 4% lower over the past 24 hours. Altcoins market cap close to taking out in September highs, and ATH did not do that in 2017 until mid-November. Renowned analyst DevTech noted about the altcoin situation on October 20th. He says it could signal some serious alt runs sooner than expected. We'll keep a close eye. Ethereum ain't playing around this cycle. And that's going back to what I opened with earlier today in the segment. The relationship between Bitcoin and Ethereum is becoming very evident. We've got Solana, one of the top gainers through this bull run. It's saying a lot right now. And the reason why is because Ethereum has more application than Bitcoin does. And the reason why we're seeing Solana go up and stay up is because Solana has even more application than Ethereum does. So people are getting an opportunity to become more familiar with not only Bitcoin, but obviously they're looking into other altcoin opportunities. We're seeing it in the graphs. We're seeing it with all the professional analysts, all the experts in the industry are essentially making the same observation. Let's get into a little bit of the crypto mining news, because there's a specific crypto mining company that achieved major growth by reinvesting profits into diverse solutions. Investors are encouraged to avoid overlooking opportunities to invest in the cryptocurrency industry by considering the underlying infrastructure. The cryptocurrency industry is expected to grow long into the future. Anyone can see evidence of this in the value of all cryptocurrencies in circulation, which has already passed $1 trillion as of the beginning of 2021, with no signs of slowing down. Although the market itself has faced some downturns, even its lowest lows show growth from the price in previous years. Industry analysts suggest that this, in part, is due to the technology itself being positioned to transform the entire financial industry, an endeavor that won't disappear overnight. For investors, the difficulty with investing in this high-potential market is overlooking opportunities. While investors quickly look to diversify their portfolios to include cryptocurrencies, they often overlook the infrastructure that supports it, with crypto mining companies being a crucial part. In many ways, diversifying an investment portfolio to include these companies offers a partial solution to the volatility that is common when investing in the digital assets alone, and provides more opportunities for new investors to gain exposure to the market. One platform allowing its users to dip their toes into the cryptocurrency pool is BlueSky Digital Assets, or BSDA, BTCWF-OTC Markets, BTC-CSE. BSDA, BlueSky Digital Assets, is a publicly traded company operating with a cryptocurrency focus. The team is building a high-value digital currency enterprise that mines Bitcoin and Ethereum and develops value-added technology services for the crypto market. As a result, the team shares, we're not embarking on a single plan, but an applied business approach of diversification to a predominantly technology-led space. To date, the team has reported initial success, breaking corporate records of 1,044,000 CDN mined in Q3, along with announcements of capacity increases in their facilities, a commitment to environmentally minded digital mining, and the release of common shares to the CSE Composite Index. It comes down to positioning. As the blockchain continues to expand in use and increase its adoption, the team increases their investments towards developing digital mining IP and other supporting application endeavors, only possible with strategic direction based on 4 major differentiators. Among them are their long-standing relationships, R&D efforts, sustainable initiatives, and large reserves. Looking at these features in more detail, the BSDA team maintains several long-standing relationships with their key suppliers. In part, this has given the company such a unique advantage to execute its strategy intelligently. They have also made several material mining equipment acquisitions, which are already in full production and providing the greater mining efficiencies. As of October 21, the company reported 2,667.04 CDN of mining revenue per day, increasing from 2.2 thousand in July 2020. Furthermore, the team has also focused on their R&D efforts, which are targeted to create additional revenue streams separate from the business's core mining revenues. The added diversification is believed internally to contribute to the company's valuation over and above what it was as a growing mining business alone. For these reasons, investors are suggesting to consider this an opportune time to consider BSDA as an investment with major growth potential. There it is, guys, BSDA. Consider that. While traditionally mining has gained a reputation for not being environmentally friendly, the team has committed to only using renewable energy. Currently, this includes 100% hydroelectric power, a method that is abundant in supply and leverages existing infrastructure that has been used for several years. Pollution is eliminated with this method since, although heat is created, it is later used by related businesses in the team's primary mining facility. In addition to mining and selling, the team holds a good chunk of cryptocurrency in the reserves, valued at 2.4 as of 2021. As strategic investors themselves, the team shares they strive to sell only at reasonable times, focusing on delivering value back to our shareholders and investors. So it's more than digital mining. BSDA is said to be much more than a digital mining company. They are a company that recognizes the major changes that blockchain is leading in the way users transact as a global audience. Their development of blockchain-focused initiatives will help support further businesses that plan to understand and leverage all of the technology's opportunities. Now, again, I want to deliver our disclaimer. These comments and this content is not necessarily my opinion. I am not a financial advisor. I, MC Medina, am just here every single weekday at 2 o'clock in the afternoon, Central Standard Time, delivering the latest and the greatest in DeFi crypto news. And I'm just sharing my personal experience. I've never lost with Bitcoin or any other cryptocurrency. I've only made money, but that's also because I like to stay informed. I like to be well researched. And so this is your destination for the latest and the greatest in global decentralized finance news. What else do we have here? I know we got some more stories to share. We got about a little over 20 minutes left here with you. So let me take advantage of your attention here. You guys, if you have any questions, please leave them in the chat while I bring up this story about Iota. This story came in by Tom Farron, and this was 6 hours ago. Okay, Iota. I put some money into Iota, and I remember learning about it, I'd say about 2 to 3 years ago, and I haven't heard too much news about Iota recently. So I want to see what's going on with Iota launching a beta smart contract package to foster interoperability. All right, the platform will enable developers to set individual parameters for execution fees, a feature expected to suppress the fee prices at near zero. The Iota Foundation has announced the release of its beta version smart contract functionality with the objective to solve market challenges of scalability limitations and higher transaction fees, as well as reportedly debuting components not witnessed thus far in the space. Iota's nonprofit foundation is focused on open source research and development initiatives to drive adoption in the distributed ledger technology space alongside its native platform, the Tangle. The smart contract service will foster interoperability and standardization through the integration of Ethereum virtual machine, multi-capacity for developers to write program languages with Tony Go, Rust, and Ethereum's Solidity, as well as enabling developers to mark unique execution fees, among other features. The latter is a prominent difference from the Ethereum blockchain and could drastically foster the reduction of fees across the network as the pool of competitors seeking to validate the smart contract increases. In March, the platform announced the release of its Alpha Iota, smart contracts protocol designed to encourage developers to build smart contracts in addition to decentralized finance and non-fungible NFT token applications. Dominic Shiner, co-founder and chairman of the Iota Foundation, told Cointelegraph that the addition of smart contract functionality will add a vital component to the Iota ecosystem. They allow anyone to build composable and complex dApps or decentralized apps using industry standard Ethereum tooling while relying on a fee-less base layer and predictable low execution fees. Iota smart contracts also enable the fearless transfer of assets across chains, which offers the Iota ecosystem and anyone else interested unprecedented opportunities in terms of utility, composability, and scalability, Shiner added. Shiner claimed that Iota smart contracts are unique in that they offer low, predictable, transparent fees, adding smart contract chains enjoy permissionless deployment without setup fees, auctions, or gatekeepers of any kind. The smart contract execution fees are predictable, non-volatile, and entirely up to the chain owner to set. The possibility for chains to compete for the work of executing a smart contract creates an additional incentive to push execution fees to their absolute minimum, including zero. Non-zero fees are payable in whatever form the chain owner demands, giving additional flexibility. In a nutshell, it's a DeFi operator's wet dream. So Iota, here launching a whole pack of smart contracts, and it looks like they're going to be offering it at a lot lower rates. The gas fees are going to be a lot lower. We definitely are going to dive more into smart contracts. I personally would like to dive more into smart contracts. So maybe one of these days we'll get into that. So China still doing things with the whole mining ban situation. China's state planning agency calls for a public opinion on the Bitcoin mining ban. The move could signal plans by Chinese authorities to amend its previous negative stance on Bitcoin and cryptocurrency mining activities. Okay, so this is really interesting news. China's National Development and Reform Commission is seeking public opinion on the inclusion of crypto mining in its list of, quote, phase-out industries. The call for public comments by the country's macroeconomic planning agency was contained in a release issued today. Back on September 24th, almost a month ago, the agency added digital currency mining to its list of outdated industries following sweeping crackdowns by authorities in Beijing against crypto miners. The move offered a definitive stance by the commission after seemingly going back and forth on the issue for the last 2 years. As part of the calls for public comments, the agency's notice requested public feedback from relevant units, as well as, quote, people from all walks of life. The public comment period will last for 1 month between today, Thursday, October 21st, and November 21st. Members of the public interested in providing feedback on the matter will have 4 different avenues to make their opinions known, including emails, physical mail, and comment section on the commission's websites. In a related development, the commission also put out a post on its website stating that the United States had replaced China as the dominant Bitcoin mining nation in the world. Wow. Okay. So after the Chinese learned that the United States had replaced China as a dominant Bitcoin mining nation in the world, that's when they decided to open up to see what all the rest of the Chinese folks have to say about this. Very interesting stuff. Okay. Indeed, as previously reported by Cointelegraph, the U.S. now accounts for over a third of the global Bitcoin mining hash rate distribution, with Kazakhstan and Russia in second and third place, respectively. Even before Beijing's crackdown, crypto miners in North America had been expanding their cryptocurrency with massive hardware orders from major manufacturers such as Bitmain and MicroBT. At the height of China's dominance, Chinese miners controlled 3/4 of the global Bitcoin hash rate. Wow. Chinese miners, driven out by the ban, have reportedly moved their hardware to overseas locations, including Kazakhstan, with states such as Texas and Florida looking to attract some of these companies. The latest and the greatest, guys, that came in 7 hours ago. So here on Conscious Crypto, we're keeping it extra super duper real. We're keeping it extra fresh, giving you brand spanking news, brand spanking new news. And this is the headquarters for your decentralized global community news. So let's get into PayPal's co-founder here. Peter Thiel says that he underinvested in Bitcoin. This is really interesting stuff. This story coming in from Helen Parts. Billionaire Peter Thiel shared concerns that investing in Bitcoin is already a, quote, known secret. Well, of course it is, Mr. Pete. As Bitcoin marked a new all-time high above 67,000, PayPal co-founder and billionaire venture capitalist Peter Thiel said he should have bought more Bitcoin. Thiel spoke of cryptocurrencies, central banks, and artificial intelligence during an interview in Miami hosted by policy think tank Lincoln Network, Bloomberg reported yesterday on Wednesday. You're supposed to just buy Bitcoin, Thiel said, adding, I feel like I've been underinvested in it. The tech investor noted that his only concern about buying Bitcoin was that the investment, quote, secret was already known by everybody. Quote, I think the answers are still to go long. Maybe it still is enough of a secret, he added. According to Thiel, the latest Bitcoin rally is definitely a big concern for global central banks. The cryptocurrency's surge to its new historical highs surely tells us that we are at a complete bankruptcy moment for the central banks, Thiel stated. Wow. The co-founder of Bitcoin, just on the record yesterday, says that the cryptocurrency surge to new historical highs, it surely tells us that we are at a complete bankruptcy moment for the central banks. This is big news. In the interview, Thiel also criticized AI as an opponent to crypto's force for decentralization, saying that AI, especially the sort of low-tech surveillance form, is essentially communist, he said, adding that AI is a technology that is going to destroy the world. Thiel is one of the most vocal proponents of Bitcoin, claiming that Bitcoin succeeded as currency in 2014. The venture capitalist is also known for calling Bitcoin, quote, a hedge against the whole world falling apart, end quote. Earlier this year, the venture capitalist warned that the Chinese central government may be supporting Bitcoin as a means to undermine the foreign and monetary policy of the United States. PayPal, which Thiel co-founded back in 1998, has been moving into crypto over the past year. The company officially announced its plans to introduce the ability to buy and sell cryptocurrencies like Bitcoin last October. So it's been about a year. PayPal has since rolled out crypto services in the U.S. and in the United Kingdom. Wow. So China definitely reconsidering a few things. We've got Peter Thiel, the co-founder of PayPal, confessing on the record and for the record that the centralized banking system is dead. It's dead, guys. Y'all heard it here. Conscious Crypto. Today, Thursday, October 21st. Let's see how everything else goes. Thank you, Peter Thiel. That is a huge statement. So also we got JP Morgan saying that they having inflation concerns and that it's not the EFTs driving Bitcoin price jump. JP Morgan strategists say that the interest in the newly launching BITO Bitcoin ETF could cool after about a week or so. Bitcoin broke its all-time high price level following the launch of ProShares Bitcoin Strategy Exchange Traded Fund, BITO, on Tuesday. But JP Morgan Chase strategists believe the key driver behind the price jump is investor concern over inflation. The BITO launch, which saw the highest ever first-day natural volume for an ETF, is, quote, unlikely to trigger a new phase of significantly more fresh capital entering Bitcoin, unquote, JP Morgan strategist said in a note. Instead, JP Morgan believes that as gold failed to respond to concerns over the rising cost pressures in the last couple of weeks, Bitcoin's renewed role as a better hedge against inflation in the eyes of investors is the main reason for the current bull run. The team highlighted that the swift away from gold's ETF into Bitcoin funds has been gathering speed since September and, quote, supports a bullish outlook for Bitcoin into year end. The JP Morgan strategist exemplified the waning interest after the first week following the launch of the proposed Bitcoin ETF BTCC in Canada, claiming that the initial hype surrounding BITO could also fade after a week. As the first Bitcoin futures linked ETF in the United States, ProShares Bitcoin Strategy ETF shared trading on the New York Stock Exchange on Tuesday at an opening price of $40 per share, and this enables investors to have direct exposure to cryptocurrency futures in a regulated market. JP Morgan's comments echo others in traditional finance. Billionaire investor Carl Icahn praised Bitcoin as a great hedge against inflation as the next market crisis looms on the horizon. Bill Winters, the CEO of British bank Standard Chartered, recently noted the passing of a long period of low inflation, adding that, quote, it's perfectly reasonable for people to want an alternative to fiat currency. Wow, Bill Winters is even hopping in and essentially confessing again that whatever currency, the euro that they're using in the UK, also the value is going down, and people are loving the opportunity to diversify, and they're loving the different options that decentralized finance has to offer. Okay, we got more news coming in here from Martin Young. AMC gets hyperactive about crypto. CEO says that it may issue its own coin. The AMC boss said that there are many reasons why the company could issue its own cryptocurrency. American multinational entertainment giant AMC is getting very excited about blockchain technology, and the company's CEO is publicly mulling the issuance of its own cryptocurrency. During an interview with CNBC on Wednesday, AMC CEO Adam Aron discussed the firm's crypto ambitions. There were no solid details, but the company boss did make some revealing comments. Quote, we've made a lot of noise in the last few months about getting hyperactive in cryptocurrency. He then canvassed the possibility of AMC issuing its own coin, stating that there are a lot of reasons why AMC could be a successful issuer of cryptocurrency as well as a redeemer of cryptocurrency. He added that this was just one of a half of a dozen ideas the company is working to roll out at the moment. AMC is very forward-looking with regards to digital assets. In August, the firm stated that it intended to have the infrastructure in place to accept Bitcoin payments for movie tickets by the end of this year. The following month, the theater giant expanded on those crypto payment options by including Ethereum, Litecoin, and Bitcoin Cash. At the time, Aaron commented that moviegoers were keen to use crypto as a payment method for their tickets, and concessions at AMC theaters. In early October, we reported here on Conscious Crypto that AMC added Dogecoin to the list of crypto payment options following a Twitter poll that Aaron held that resulted in a 68% voting for Doge from more than 140,000 voters. On October 6th, the company announced digital gift cards that can be purchased with crypto and redeemed for tickets and AMC e-card purchases. The token issuance for listed companies in the United States may be no easy task with ever-increasing regulatory hurdles to overcome. But the social media giant Facebook is finding this out the hard way as the scrutiny directed towards its cryptocurrency issuance plans continues to mount. AMC shot to fame due to investor momentum early this year when share prices surged after becoming a meme stock favored by retail traders on Reddit's infamous R Wall Street Bets forum. At the time of this, AMC shares are trading at $40.86, down marginally on the week, but it's up 6.2% since the beginning of October. AMC continuing to lead the way in the adoption. We've already reached we've gone over this, guys. We reached what's called critical mass. So we see major corporations, international corporations. We see major government organizations. We see major financial and investment organizations. We see major entrepreneurs, international entrepreneurs, considering and saying crypto is here to stay. There's nowhere else to go. This is the future of your digital property. So we're going to do our very best to continue to give you guys the latest, the greatest in DeFi crypto news, global, decentralized finance news every single day at 2 o'clock in the afternoon from 2 to 3 Central Standard Time. We want to give it to you just like that. If you have any comments, please don't be shy. Please don't be shy. Leave your comments below. We're going to get into our last story of the day. And this, ladies and gentlemen, is Trustkeys. I went over a little bit over it yesterday. Trustkeys is the new Facebook killer. Trustkeys incorporates a wallet, an exchange, and a person-to-person, highly encrypted messaging service. Also soon to be incorporating an NFT platform to where you can buy and sell NFTs. With Trustkeys, you can also upload information like photos and videos and even check out the newsfeed, post up different things. In the long run, Trustkeys is aiming to bring all fiat currency, centralized and decentralized platforms all onto one decentralized platform. With Trustkeys, we're able to hold money in a wallet. We are able to exchange tokens for tokens, and it also has an exchange for fiat into cryptocurrency. We're going to leave links below in the description, so if you're interested in learning more about the new Facebook killer, a company that does not take your personal data, a company that does not take your identity and the things that make up your digital avatar and sell it to third-party companies, a company that has all of the answers when it comes to bringing social media onto the blockchain and bringing different payment systems together all on one platform. Trustkeys. Trust me, you're gonna love it. So I'll see you guys on Trustkeys. We just ordered some new Oregon pyramids. If you guys don't know what Oregon is, it's essentially like a pink Himalayan salt lamp. It helps to remove low electromagnetic frequencies, also known as low EMF, and it also converts positive ions into negative ions, and those are what seem to be the most beneficial. So this is one of our new offerings to the community. And we've still got the cacao beans, and we're gonna end with lighting some more Palo Santo, perhaps some sage here. And every day at 2 o'clock, my name is MC Medina, giving you the latest and the greatest in global decentralized crypto news. Do your research, guys. Invest intelligently. Remember, these are just my opinions. I'm not a financial advisor, but I do want to remind you 2 things, guys. 3 things. Stay conscious, stay getting that crypto, and be blessed. Peace.